Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at Forex trading on CAD, the FTSE 100, the S&P 500, the NASDAQ, and WTI Crude Oil. Just a reminder that these videos are intended as educational. We are only observing current market conditions, and these are not to be considered as trading advice. We see the price of WTI and Brent crude oil increasing steadily since the beginning of the year. Why is this? Firstly, we've had geopolitical tensions all year, mostly based on the US facing off against Iran. Secondly, OPEC Plus production levels have remained steady, despite the third reason that supply is steadily decreasing. The fourth reason is simply demand, as colder than normal weather has affected much of the Northern Hemisphere this year. Again, we see price rising as price action has just bounced off the lower trend line and the stochastic oscillators turning up from oversold. Also, we could list several reasons for the decline in the global stock indices, where a risk-off mood with economic uncertainty, a weak U.S. jobs market, and a fear of overpriced tech and AI stocks are causing a sell-off. Again, good news from any level, including the U.S. Supreme Court regarding the legality of tariffs, should help the market to have confidence to buy the dip. Speaking of buying the dip, the UK's FTSE 100 has fallen as well, but technically we may be looking at a reversal as price action reaches this lower trend line. We see most Canadian dollar pairs ranging except for CAD, where we have some volatility. Regardless, this afternoon we will look for an opportunity after the Canadian employment data due out at 1:30 London time. Last time we looked at setting up moving average crosses on cTrader. Now we can look at a couple of practical examples used by analysts and financial news outlets. Here we have a slow 200-period simple moving average being crossed by a faster 50-period simple moving average. This is called a golden cross, and it gives the market confidence that the bull run will continue. The opposite is called a death cross, where the 50 passes below the 200, but we are not there yet. We do see, however, that price action on the NASDAQ is falling close to the 200-period simple moving average. If it falls below, we would be entering a bear market. An example of the death cross can be seen here, and look what happened to price action after that. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.